Good evening, my dear students. So today we'll be doing accountancy. Okay, I'll be teaching you all accountancy, and this lesson is from the first chapter, that is fundamentals of partnership form. Okay, so I've already explained you in my previous class about the partnership form, features of partnership form, different types of partnership, different types of partners, etc. So today in this lesson I'll be teaching you all partnership deed and the contents of partnership deed. Okay, so let me explain you partnership deed first. So partnership deed basically is a written document which contains all the terms and conditions of partnership. Okay, it contains all the terms and conditions, and the contents of the partnership deeds contains the following. So I'll explain you the contents of the partnership deed. Okay, the first content of the partnership deed is name and address of the firm. A partnership deed should contain the name and the address of the firm. Okay, suppose if the company's name is ABC Company, if your firm's name is ABC Company and it is situated in Kolkata, then you have to mention the name and address of the firm in the partnership deed. Okay, for example, ABC Company, Kolkata in the partnership deed. The second one is your name and address of the partners. So after the name and address of the firm, the second thing is your name and address of the partners. You have to mention the name of each partner. Suppose if you have three partners A, B and C, or P, Q and R, then you have to mention the names and along with the address. You have to mention the name and the address of the partners in the partnership deed. And the third one, nature and place of the business. Now in the third place you have to explain the nature and the place of the business. Nature means what kind of business you are doing. For example, it can be a retail business, it can be a service business, it can be a food service business, etc. Suppose if you are running KFC or some other food services, then it is a food service business. Okay, it can be a retail business also. You have to mention the name and nature of the business and place of the business in the partnership deed. Okay, so after that we have duration, if any, of the partnership. Now the next thing is duration of the partnership. Now you have to mention the time period for how long you are running a partnership firm. For example, if you are running a business for 2 years, then you have to write 2 years in duration. And if you are running a business for 3 or 4 years, then you have to write 3 years, 4 years, etc. I have explained you in my previous class about the types of partnership. Okay, so in the duration of the partnership, there are two types of partnership form. First is yours particular partnership. So in the particular partnership, they will not mention the duration in the partnership deed, because a particular partnerships, that duration will not be mentioned. The venture will get dissolved automatically after the completion of your contract or some work or the venture. Okay. Then second type of business partnership is your partnership at will. The partnership at will also, they will also not mention the duration, because the duration or the time period depends upon the partners. You can continue the business if your business is a partnership at will, then you can continue your business for 2 years, 3 years, or you can dissolve it within 1 year also. It depends upon the will of the partners to continue the business, to dissolve the business. Okay. So now next is your capital contribution by each partner. So how much money your partners are contributing. Okay. For example, if one partner is contributing 10,000, another one 20 and another one 30, then you have to mention everything in the partnership deed. Okay. Capital contribution also you have to mention in the partnership deed. The next comes your interest on capital. I hope you guys know the meaning of capital. Capital means something like if you are investing some money in the beginning of the business, then that is known as capital. Okay. So each partners will invest capital before starting a business. So interest on capital means if you are investing something in the business, if you are investing capital in the business, then you should get some interest from the business. Okay. That interest given on the capital is known as interest on capital. Interest on capital. So you have to mention like how much, what is the rate of interest, whether it is 10%, 5%, you have to mention that also in the partnership deed. Okay. So next is your drawing and the interest on drawing. So what is drawing? Drawing simply means if a partner is withdrawing money for the personal use, then that is known as drawing. Okay. So drawing, how, like what is the maximum limit for the drawing? What is the minimum limit for the drawing? Okay, and then interest on drawing means what is the rate of interest charged for drawing. For example, it can be 10%, it can be 6%. If a partner is withdrawing money from the business for his personal use, then interest will be charged on that amount. Okay, and that is known as interest on drawing. And then you have to mention the rate of interest on drawing in the partnership deed. Okay, first drawing and the interest on drawing. The next comes your profit sharing ratio, one of the most important feature of your partnership form, and here it is partnership profit sharing ratio, and profit sharing ratio means the ratio at which the partners will share the profit. They can share the profit equally also in 1:1 ratio, or they can share the profit in their capital contributing ratio. Capital contribution ratios they can share in that ratio also. You have to mention profit sharing ratio also in the partnership deed. Okay. The next comes your interest on loan. If a partner is advancing some loan to the business, then the partner is entitled to get some interest on that loan. Okay, you have to mention that rate of interest also. You have to mention the interest on loan. The next is your partner's salary, commission, etc. If a partner is entitled to get a salary or commission in the business form for the extra work, then you have to mention that also in the partnership deed. Okay. So next comes your method for valuation of goodwill and assets. Suppose if you are calculating the valuation of goodwill and assets, then that method also you have to mention, whether it is a super profit method or average method, you have to mention that method in the partnership deed before starting a business. Okay. The next comes your accounting period of the firm and duration of partnership. So accounting period of firm means generally your accounting period starts on 1st of April. Okay, and the ending date is 31st of March, but it can be 1st of April to 31st of March, or it can be 1st of January to 31st of December. You have to mention that accounting period as well in the partnership date. The next is your duration of the partnership. We have, I think so it's there in the 4th point only, duration, like time period for the partnership. Now let's do the second, next one, that is yours rights and duties of a partners and how disputes will be settled. So right of a partner, duties of a partner, you have to mention in the partnership deed, and then if there is any disputes, if any disputes arises in the partnership, then how to solve those disputes. Okay, if any conflicts arises, then how to settle the disputes, you have to mention that also in the partnership deed. Decision taken if some partner become insolvent. So insolvent means bankruptcy. Okay, if a partner is become insolvent or bankrupt, then what are the decisions to be taken? Okay, that also you have to mention in the partnership deed. Then opening of the bank account, whether it will be in the name of the firm or the partners. If you are opening an account, bank account, then whether you are going to open that account in the name of the firm or in the name of the individual partners, that you have to mention in the partnership deed. Okay. The next is retirement or death of a partner. So retirement or death of a partner, that also you have to mention what are the is there any specific thing for the retirement and death of a partner, for revaluation, etc. That also you have to mention in the partnership deed. And next, rules to be followed in case of admission and settlement of account. When new partner is entering the business, what are the rules which is to be followed by the new partner or by the firm, that also you have to mention in the partnership deed. The next, revaluation of assets and liabilities, if any, to be done. Okay, revaluation of assets, liabilities, methods of recording of the firm's account and auditing. So how are you going to record the firm's account? That also you have, what are the methods? That also you have to mention in the partnership deed. Last one, date of commencement of the partnership. Date of commencement means when, like the beginning of the, when are you going to, after the registration, you will start your business. Okay, you have to mention that date. Date of commencement of the partnership business, that also you have to mention in the partnership deed. Okay, so our partnership deed contains all the following points. Okay, you have to mention everything in the partnership deed before you start a business. Before you start a partnership form, you have to mention all these things in the partnership deed in order to clarify. Like for example, if any dispute arises afterwards, you can at least clarify if you have a partnership. So in a country like India, partnership deed is not compulsory. Okay, you can either have a verbal agreement or you can have a written agreement. It is not compulsory to have a written agreement or a partnership deed in India. Okay, so for that reason, there are some rules. In absence, like I've told you what are the contents of partnership deed, right? I've explained you the contents of partnership deed. Now we'll be doing the rules. Okay, in absence of the partnership deed, if there is any, like if there is no partnership deed in the business, then what are the rules? Okay, we will discuss about the rules. So rules to be followed in absence of the partnership deed. In the absence of the partnership deed, the following rules have to be followed. Okay, and those rules are: number 1, the partners are entitled to share profit or losses equally. So if there is no partnership deed, the partners will share the profit and losses equally. Okay, irrespective of their capital contribution ratio, they will share the profit and losses equally if there is no provision for the partnership deed. Okay, the next second is partners are entitled to interest on their capital. Partners are not entitled to interest on their capital. If there is no partnership deed, then the partners will not get any interest on their capital. Okay? If there is a provision for the partnership deed, then they will get the interest mentioned in the question. For example, if the rate of interest is 6%, they will get 6% interest on the capital. But if there is no partnership deed, then the partners will not get any interest on the capital. Okay? Third, no partner will be allowed salary or any other remuneration for any extra work done for the firm. The partners are not entitled to get any salary or any commission in absence of the partnership deed. Okay, so like if there is no partnership deed, then the partners will not get any salary or commission from the firm. No interest will be charged on partners drawing. So if there is partners drawing, then the interest will not be charged on partners drawing. If there is no provision or there is no partnership deed, then the interest on drawings will not be charged. Okay? Then fifth, interest at 6% per annum will be allowed to the partners on any loan given to the firm by them. If the partners are advancing any loan to the firm, then they will get 6% interest, that is fixed. If there is no partnership deed, then they will get 6%. If there is a partnership deed, then they can get, like if the rate is 10%, if it is mentioned in the question, they will get 10%. But if it is not mentioned and if the partnership deed is not there, if it is not present, then they will get 6% interest. Partnership fundamentals is your profit and loss appropriation account. Okay, so profit and loss, we have to make profit and loss appropriation account, and then partners capital account, and then the balance sheet. Okay, these are the three types of accounts which we have to prepare in the partnership form. Okay, so now we'll be discussing about the profit and loss appropriation account. So profit and loss appropriation actually is an extension of your profit and loss account. It is an extension of profit and loss account. We all know that like in class 11 you all have done final account. Okay, so in final account there are three types of accounts. So one is your trading account, second is your profit and loss account, and the third one is your balance sheet. Okay, so in the trading and profit and loss trading account, you will prepare trading account in order to find gross profit, and then you will prepare profit and loss account to find net profit. Okay, so after that, after ascertaining the net profit, you have to prepare profit and loss appropriation account. Okay, that means profit and loss appropriation accounts comes immediately after your profit and loss account. So it is an extension of your profit and loss account. Okay, so you will get net profit from the profit and loss account, and then you have to distribute that net profit among the partners. So profit and loss appropriation is nothing but the distribution of the profit among the partners. Okay, suppose if there are three partners, then you have to distribute the profit among between these three partners. Okay, so now this is your profit and loss appropriation account for the year ended. This is the format of your profit and loss appropriation account. Okay, so format, in one side you have to make particulars and then amount, and then again particulars and then amount. Okay, you don't have to mention, you don't have to write the dates, because this will be prepared at the end of the year. Okay, you just have to mention 31st March 2019, 20. Okay, but you don't have to write any, no need to write any dates. So particulars, amount, particulars, amount. So I've already told you that here this is an extension of your profit and loss account. So it will start with the balance of your net profit. Okay, so right, and this profit and loss appropriation account is a nominal account. It is a nominal account. So nominal account. So nominal account, what is the golden rule for nominal account? Debit all expenses and losses. Debit all expenses and losses and credit all incomes and gains. Credit all incomes and gains. So this is the rule. The rule for nominal account is debit all the expenses and losses and credit all the incomes and gains. That means you have to debit the expenses or the losses and then you have to credit the incomes and gains. Okay. So this is your firm's account. You have to consider this account as the firm's account. Okay. So firm's account means you have to write here, like for example, salary given to the partners. Okay. If you are giving salary to the partners, then that salary is expense for the firm, isn't it? You are giving salary to the partners means it is an expense for you. The salary is an expense for you, whereas for the partners it is an income. Okay. So you have to consider yourself as the firm while preparing this account. Okay. So if you are a firm, then like if you have to consider yourself as the firm while preparing this account. So now say net profit is your income, isn't it? So you have to write net profit in the credit side. This is your debit side and this is your credit side. So write net profit by profit and loss account, and inside the bracket write net profit. Okay. So net profits amount will be given. You have to write that net profits amount. Okay. So after that, okay. So before that, let me first write all the things which will come in the profit and loss appropriation account. Okay. First is your interest and capital. The partners will get interest and capital. Then second thing, salary. Partners will get salary, commission. Okay. Commission and then interest on drawings. Okay. So interest on capital, salary, commission, interest on drawings. These are the items of your profit and loss appropriation account. Okay. I've already like profit and loss appropriation, profit and loss is already mentioned, net profit. So now let's do interest and capital. So interest on capital means the partners are getting interest on their capital. Okay. So you are giving interest to the partners on their capital, means it is loss for the firm. It is an expense for the firm, not loss, but it is an expense for the firm. So expense will come on the debit side, whereas income will come on the credit side. So let's write expense, that is interest on capital. So to interest on capital. Okay. Write the amount on the amount column. After that, second item, salary. Salary given to the partners. Okay. So for salary given to the partners means the firm is giving salary to the partners for the extra, for the like extra work. If they are doing any extra work, then for that reason they will get a salary, isn't it? So for the firm it is an expense. So expense again will come on the debit side. So write to salary, to partners salary. So in this interest and capital, you have to mention the name of the partners. Okay. Suppose if it is A and B, then write A's and B's account, and then you have to write the amount here on this side and then total it and write the total amount in this column. Okay. Then two partners salary. If one partner is getting a salary, then write A salary or B salary. If both the partners are getting salary, then you can write the names here. Okay. A's salary account to B's capital account, and then write their total balance here in this column. Okay. The next, commission. If the partners are getting commission, then the commission for the firm is an expense. Okay, you are giving commission to the partners, means for you it is an expense and for the partners it is an income. So the expenses will come again on the debit side. So write to commission. To commission or to partners commission. To partners commission. Okay. The next, Last item is your interest on drawing. Okay, interest on drawing means when partner withdraw money from the business for personal use, they will be charged some interest. Okay, the partners will have to pay some money to the firm, some interest to the firm. Okay, so that is an income for the firm. It is an expense for the partners, but income for the firm, isn't it? If partners are paying interest on their drawing to the firm, then that is income for the firm. So income will come on the credit side. Okay, so write by interest on drawing. Okay, so if both the partners are withdrawing, then you can write AB and then the amount, total the amount, and write the total amount in this column. Okay, so these are the items. Or one more item is there, that is your reserve. Okay, sometimes you have to, like if there is any reserve in the question, then that reserve will also come in your profit and loss appropriation account. While distributing the profit, you have to consider reserve as well. Okay, so write reserve to reserve. Okay, so now okay. So after this, what you need to do is you have to total the balance. Okay, so total the debit side and total the credit side. Okay, suppose if your debit side, if your credit side is greater, then if it is more, then you can write the balance on both the column. Okay, both on debit and credit side. If this side is greater, then write the balance, same balance on both the column. Okay, after that, you have to write the difference. Obviously, you will get a difference, isn't it? If this is greater, then you have to like subtract total this and subtract it from this one total. Okay. After that, you will get some balance, and that is your two partners capital account. Inside the bracket, write profit to be transferred. Profit to be transferred. So profit to be transferred to the partner's capital account. Okay, then write the name of the partner. Okay, okay, and after that, suppose if your profit here is 200 rupees and the ratio of profit sharing ratio is 1:1, then you have to distribute the 200 in 1:1 ratio, that is 100 to A and 100 to B. Okay, so at last you have to distribute the profit in the profit sharing ratio. Okay, so this is a format of your profit and loss appropriation account. Please go through it once. After that, I will give you one question and we will try to solve that question. Okay. A and B are partners in a firm. Their capital accounts on 1st of April 2018. It's 2018. Please read it as 2018. Okay, there is a mistake. Stood at 90,000 rupees and 1,80,000 rupees respectively. As per the provisions of the partnership deed, A was entitled to get a salary of rupees 500 per month. Okay, so A will get a salary of rupees 500 per month. So while reading the question, you please make a start writing it in the rough column. Okay, so capital accounts are given, so you can write here capitals. Who all are the partners? Capital. So who all are the partners here? A and B are the partners, so you can write A and B. Okay, so in this manner you can write A and B, and then what are the, let's say the capitals are 90,000 and 1,80,000 respectively. So we can write 90,000. So here in A's place and then 1,80,000 in B's place. Okay. So these are the capital contribution of A and B. A is contributing 90,000 in the business and B is contributing 1,80,000 according to the question. And then as per the provisions of the partnership deed, A was entitled to get a salary of rupees 500 per month. Okay. So we are making an account for a year. Okay. For a year means from 1st of April to 31st of March for one accounting period, and the salary given is for a month. So now in 1 month A is getting 500 rupees, means in a year he will get 5 into 12, that is 6,000 rupees. Okay, 5 12 is 60, so it's 6,000 rupees. So let's write here salary. Okay, who is getting salary? A is getting salary of rupees 500 per month, which is 6,000 rupees per annum. So write per year, so 6,000 rupees. And B is not getting any salary. Next, interest on capital was to be allowed 10% per annum. So interest on capital is to be allowed at the rate 10% per annum. So write your interest on capital, interest on capital. Interest on capital. So A is getting 10% of 90,000. Okay. So 10% of 90,000. How to calculate 10% of 90,000? Just write 10. Percentage means 10 divided by 100. Okay. Of 90,000. Strike out the zero. So cancel. Now 900 into 10 gives you 9,000. So A's interest on capital is 9,000. And B's interest on capital in the same manner is 10 divided by 100 of a capital, that is 1,80,000. So this is equal to 18,000. Okay, so 9,000 and 18,000 is the interest on capital. Okay, now after that, profit and losses were to be said in the ratio 3:7. So you have to write here profit and loss. Ratio of profit and loss is 3 for A and 7 for B. Okay, it's 3:7. 3:7 means 3 divided by what is the total ratio? 3 plus 7 gives you 10. So write your 10, and 7 plus 3 again gives you 10. So 3 by 10 of your profit and 7 by 10 of your profit. Okay. So net profit for the year ended 31st of March 2019 is 83,000. So what is the net profit? It is 83,000. So write your net profit, NP, it's 83,000. Okay. So prepare profit and loss appropriation account for the year ended 31st of March 2019. Okay. So here, like I've written everything on the board, so no need to check the question. Okay. So like this you have to read while reading the question, note down everything like interest and capital, whatever is given in the question, try to note it down. Okay. So it will be easier for you to solve the question. So now, the first items, as we all know, the first item of your profit and loss appropriation account is net profit. It will start with net profit. So let's write net profit. By profit and loss account, inside the bracket write net profit. Okay. So net profit is 83,000 rupees. So write here 83,000. Okay. So after that, is there any interest in capital? No, there is no interest in capital. So now move to your debit side. The first item is your capital. Sorry, capital is given 90,000, 1,80,000. Then your salary is 6,000 and then interest on capital. So let's write interest on capital. So interest on capital is expense for the firm. You are giving interest on the partner's capital. So it will come on the debit side. So write here 2. Interest on partner's capital. Interest on partner's capital account. So write here, who all are the partners? So partners are A and B. So write A is capital account and B is capital account. Okay. So A is getting 9,000 rupees as interest and B is getting 18,000 rupees as interest. So write A's amount here, that is 9,000 rupees, and B's amount after calculating 10%, it's 18,000. Now what you need to do is you have to add this to amount and you have to write it in the main column. Okay. So 9,000 plus 18,000 gives you 27,000. So write here 27,000. Okay. So after this, it's salary. And who is getting salary? A. Only A is entitled to a salary of rupees 6,000 per year. Okay. It was 500 rupees per month. So 5 into 12 gives you 6,000. So here you have to write 6,000 rupees. So 2 Who is getting salary? A. So, write to A is salary. So, he is getting 6,000 rupees as salary. Okay, done. The next, no, capital will not come, only interest and capital and salary will come. Okay. So, commission is not given in the question. So, this are the items of your profit and loss appropriation account. So, next is your totaling of the balance. Okay. So, now first check, just first total this one. This is 83,000, so 83,000. Now, total this 27,000 plus 6,000 gives you 33,000. So, 83,000 is more than 30, it is greater than 33,000. So, we will write 83,000 rupees on both the column. Okay, so write 83,000 on both the column, both on debit and credit side. Now, the next step is you have to subtract this total, that is 33,000, from this total, that is 83,000. Okay. You have to subtract the total of debit side from the total of credit side, because debit side is small, means credit, your credit side is greater than the debit side. Okay. So, that is why we are subtracting debit from the credit side, smaller from the greater one. Okay. So, now 3 minus 3, 0. So, 8 minus 3 gives you 5. So, the difference is 50,000 rupees, and this difference is your profit, share of profit. Okay, we have to distribute this difference among the partners, between the partners. Okay, so now see here, to write, this is your profit and loss appropriation account. So, we will write partners capital account to partners capital account. Okay, so inside the bracket write profit to be transferred to profit to be transferred to, okay, A, that is the first partner, and B is capital account. Okay, done. So, what is the difference? Just now we calculated the difference, and the difference is 50,000 rupees. Okay, that difference you have to write here in this column. This is the difference and this is the profit which is to be distributed among the or between the partners A and B. Okay. So, A will get 3/10 of this amount, because the ratio was 3:7. Okay. So, A's ratio was 3 and B's ratio was 7. So, here A's share is 3 divided by this plus this gives you 10 into what is the share of profit, total profit is 50,000. So, 3/10 of 50,000 means, strike out this 0, 3 into 5, 15. So, it is 15,000 rupees. So, A will get 15,000 rupees and B will get in the same manner. So, B will get 7, B's share is 7. So, 7 divided by sum of the ratio, that is 10, into your total profit. Total means you distribute like profit, that is the difference. Okay, this profit you have to consider this one, not this profit. Okay. So, 7/10 into 50,000 gives you, strike out this 0. Now, 7 5s are 35, so it is 35,000. 35,000. Okay. Okay, let me explain you one more time. A and B were the partners in a firm. They contributed 90,000 and 1,80,000 rupees in the business, and A was entitled to get a salary of rupees 500 rupees per month, which is 6,000 rupees per year. So, B is not getting any salary. Interest and capital is 9,000. After calculating 10% of 90,000 is 9,000, and 10% of 1,80,000 is 18,000. Okay. Then the profit and losses, the ratio was given, profit and losses. The ratio of profit and loss was 3:7, which is 3/10 for A and 7/10 for B. Okay. And the net profit was 83,000. Okay. So, as we all know, in profit and loss appropriation account, there are two columns, debit and credit, and in the credit side you have to write all the incomes, and on the debit side comes your expenses. It is a nominal account, so you have to write expenses on the debit side and incomes on the credit side. Okay. So income means only one item is here. We are distributing the profit. So we are distributing net profit only. So this is your profit and loss account. Okay. So by profit and loss account, which is given in the question, that is 83,000. Inside the bracket write net profit 83,000. After that, the first item of your debit side is interest on capital. The partners are getting 10% interest on their capital, which is 9,000 for A and 18,000 for B, and the total is 27,000. That is, total of A and B is 27,000. Okay. Then second, A is entitled to a salary of 6,000. So write A's salary after calculating per year. It is 6,000 rupees. Okay. Then next, after this, these are the items of profit and loss appropriation account. Now what you need to do is you have to total the balance. You have to check which side is greater. Okay. So now here it is clear that this is greater. 83,000 is greater than 33,000. Total of this two. So we will write 83,000 on both the sides, both the column. Write 83,000 rupees here on the debit side, and on credit side also 83,000 rupees. Now after that, you need to take the difference of this and this, that is 50, 80 and 83,000 and 33,000. Okay. So the difference of 83,000 and 33,000 is 50,000. So we will write the difference here, okay, as partners capital account, profit to be transferred to A and B. Okay, our partners A and B. So A is capital account and B is. Now we have to distribute the profit in the given ratio, which is 3:7. Okay, our profit is 50,000 rupees. So the A share is 3/10 into 50,000, which is 15,000. Okay, write it here. After that, B share is 7/10 of 50,000, which is 35,000. Okay, so this is your share of profit of your partners, that is A and B. Okay, they are getting 15 and 35,000. So this much for today. So I'll be giving you all some questions from profit and loss appropriation account, and in the next class we'll be discussing about we'll be calculating interest on loan. Okay, we'll be doing interest on drawings, etc. Okay, so for the this much for today. Thank you, class.